Americans For Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans For Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, July 19th, 2019. Land conservation. How the wealthy in the swamp did it to us again. When Congress in the swamp tell us that a tax benefit is for a good purpose and that only uncaring ogres could oppose it, that should immediately raise a red flag and cause us to be very wary. Now, who could possibly object to tax benefits given to landowners who enter into agreements with land trusts or government agencies to donate an easement which permanently protects important conservation resources? Well, here's how it works. If a piece of land is worth $10 million if used to build homes on it, but worth just $2 million if the landowner gives up the easement, then the landowner can deduct the $8 million loss in value. This tax benefit was enacted in 2006 and was made permanent in 2015. The donor can take a deduction for the value of the easement and use it to shelter up to 50% of their income in the year of the donation and then carry forward any unused portion for 15 years. When the donor of the property is a farmer, someone who makes more than 50% of his income from farming or ranching, then the farmer can deduct the amount of the donation to shelter 100% of his income and again carry any unused amount forward for 15 years. For example, let's say you own a tract of land that would be a great conservation area and you grant a permanent easement to a state agency. The value of the easement is $1 million. Now, if you're making $100,000 a year, then you will reduce your taxable income by $50,000 for 2019 and every year thereafter for 15 years. Now, if you're in the 30% income tax bracket, that will save you $15,000 per year for 15 years, a total of $225,000. So, what's not to like about this arrangement? This IRS section was quickly used by promoters of tax shelters. The promoter acquires a piece of land and obtains an appraisal saying the land is worth up to 10 times what he paid for it. Then he sells interests in the land to investors and creates a vehicle allowing these investors to deduct between 2.5 and 10 times what they invested in land conservation deductions. Here's an example of the benefit a high-income individual earning $500,000 a year and in the 37% federal income tax bracket can obtain. Assume the earner invests $1 million in one of these projects and is able to deduct $4 million. That's a conservative example because many of these packages offer even larger deductions. Year one, the individual's taxable income will be reduced from $500,000 to $250,000. The $5 million total will be reduced to $4.75 million. Now, assuming income continues at $500,000 for the next 15 years, the investor can reduce his taxable income by $250,000 each year for deductions totaling $4 million. If his federal income tax rate stayed at 37%, then he will save 37% of that $4 million, which is $1,480,000. This is a profit from tax savings alone of $480,000. Now, because of criticism in the Wall Street Journal and other financial publications, the IRS decided that there might be something wrong with this arrangement. So they now require promoters of these schemes and their investors to provide disclosures to the IRS. This has prompted the promoters of these schemes and their clients to hire people in the swamp to lobby Congress to keep the IRS from cracking down on these schemes. According to a Wall Street Journal article by Richard Rubin published on March 14, 2019, from 2010 through 2016, taxpayers deducted $20 billion this way. Now, since many of these investments allow investors to deduct multiple amounts of their deductions for up to 15 years, the real story of the true cost to the government is the many times more lost in taxes. Senator Steve Daines of Montana and Senator Debbie Stabenow of Michigan introduced Senate Bill 170, limiting this deduction amount to 2.5 times the investment. Senators Chuck Grassley of Iowa and Ron Wyden of Oregon, the chairman and ranking member of the Senate Judiciary Committee, are now going to hold hearings. Now, this will prompt more money to lobbyists and more money to purchase tickets to fundraisers held by members of Congress. These actions in the Senate will generate more money to the swamp from the tax shelter promoters and more contributions to these influential senators. So just who loses in this scheme? That's easy. Almost all American taxpayers. The billions of dollars being saved by the tax shelter investors either has to be made up by the rest of us, or it simply increases the national debt. There's no other way to make up for the lost revenue. Now, just about everyone favors conserving land. However, it should not be accomplished by making laws and regulations providing incentives to only some of us through the income payroll tax system. Doesn't it make more sense, if we want to encourage conservation, to simply raise the money in the most economically efficient manner possible without trying to legislate winners and losers? Of course it does. So how do you do that? With a fair tax, the only truly fair tax. Then when Congress has the money, let them decide how to best encourage landowners to grant conservation easement. At least that way it's not hidden. In conclusion, like with most special provisions of the income payroll tax system where the swamp and Congress hope no one questions their motives, the first thing we have to ask is, what's in it for them? We've learned that the only thing motivating the swamp and their allies in Congress is doing things that benefit them, either with money now or with the opportunity to make more money later. They like nothing more than making people beholden to their actions, because this keeps the people who get the tax break motivated to keep paying and paying and paying to the swamp and to their allies in Congress. So why reward this type of behavior? Why permit the way that we fund the government to become an auction system where only the wealthy and well-connected participate? That makes no sense. It's time to get rid of that corrupt system. It's time to pass the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans For Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org or bigsolution.org.